All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, into the action. Another bloodbath this week on the S&P 500 as well as the broad stock market. Last week we talked about this bearish reversal candle, gap up, and a close below the low, so an engulfing reversal on the weekly. And this week we saw a continuation to the downside. You can see here the spiders via the S&P SPY there is basically into double bottom, as is the NASDAQ, right into very close to double bottom. We filled that gap there in late June, and the Russell 2000 as well, very close to double bottom. The Dow via the diamond here actually pierced double bottom and made a fresh 52-week closing low, actually closing below that low pivot there from June. Now, the bear continues on here. We are a little short-term oversold, and we did finish off the lows on Friday. We had a nice bid come in around 3 p.m. You can see here on the intraday, so right around 3 o'clock. Started to bid up a little bit. To me, that looks kind of just like short covering ahead of the weekend. Shorts taking profits after this pretty good sell-off here and just trying to lock in gains before the weekend. That's totally normal here. Some other things going on. We had the highest amount of put volume on Friday into the lows. So a lot of the time that can be a contrarian indicator, contrarian buy indicator, as there's two sides of that trade, and usually the market makers, the hedge funds, are selling those puts to retail. And a lot of the time, obviously the retail are the ones who are chasing at the lows and shorting into the hole. So sometimes you get a nice counter trend move right after that. And I personally think that we are close to a low pivot, not necessarily a low for the year, but a low pivot here and some type of a short-term reversal. But I am expecting some more downside. Remember, we had the highest put volume of all time on Friday, but previously the highest put volume was January 24th. So we just broke that record, and this wasn't exactly a low. I mean, it was a low, a short-term low. It lasted about a week or two, and then we kind of rolled over, and then we had the squeeze, and then ultimately the market went lower. So it is a short-term contrarian buy indicator, but it's not necessarily saying this is a major bottom. This was not, let me be clear on this. This is not capitulation volume. 122 million shares is not capitulation. Neither was this. So back in June, I mean, or we had 134 million. That's not capitulation. Even this isn't capitulation. 200. You want to see 300 million at least for several days. 250, 300 million for several days to a week. That's where you get that capitulation volume. We have not seen that yet. So I do believe the market is going lower, and that's kind of what I've expected anyway. But short term, very, very short term, we should get a bounce here. Market is very oversold into, about as good a support as you're going to get here. So that's what we're going to look for. I am expecting another leg lower, probably closer to the, to the election. I think we'll probably peak as far as max downside. And then I have us penciled in to kind of have some type of a more extended relief rally. That doesn't mean it's going to be a rip your face off rally, but it'll be a more quieter period. Maybe into year end and possibly into the new year, but that's a little bit of ahead of time. Short term, if we flip our lines back on here, if we were to rally up, you'll be able to fill that gap. So 375 or so on the spiders will be a little bit of resistance, and you have 381. So this pivot low right here, right in there, 381, 382. And if you get above that, 390 would be your big time resistance level there. That's where you broke down from. So that is the major area. You also have this downsloping trend line that could come down and meet price at some point. So that is something to pay attention to as well. All right, so let's move on to some sectors here. As usual, starting off with the semis. Again, you can see straight into double bottom, just like the Qs, just like the spiders here, right into double bottom. Got a little bit of a bid off the lows. You can see again there. Really everything around 3 p.m. got a nice little bid there on Friday and some short covering. So double bottom held into the weekend, and you should see a little bit of bounce here. Again, there'll be resistance around 202. Then you got that 20 moving average down sloping, a couple of pivots here around 205. So in that kind of vicinity, 200, 205 on the semi should be good resistance here. But what a fall there. And take a look at Intel, by the way. This has been an absolute Absolute mess here. Look at, I mean, Intel's a big company too. 68 bucks all the way down to 27. I've got a good level around 26 worked out for this, which is where I think it ultimately wants to go. But what a fall for Intel. Take a look at AMD as well. A big fall here. I've got a bunch of fibs on here. I like this around $60 here for a good bid here, but semiconductors taking a huge hit this past week, as did cloud software IGV. So again, finished off the lows like everything else did, but take a look at that weekly candle. Ugly weekly, closing below all these pivots on a weekly basis. This will have a little bit of support around 240, but I think this ultimately wants to go lower as well. That's a really good bear base there, guys. So big move down, chop for, you know, a couple months. That's got a big base there. And speaking of bear bases, take a look at Google. Look at that. That is a beautiful bear flag there on the weekly time frame. Microsoft as well. Like tried to break out there, couldn't, and now you're pushing back down there. That is headed down to about 210 from what I've got calculated. But either way, back to cloud software there. Yeah, this is a really good bear base, and this is making new lows now as well. So you have to respect that. Speaking of new lows, Dow Transports, what a slam this week here. This is ultimately headed to 11,000. That's where I think it's got really good support. I'd consider picking up some longs there. I do think FedEx is a little intriguing, right around 140. But the Dow Transports here, pretty big sell-off here. Again, we talked about last week's reversal, you know, engulfing reversal, just like the rest of the market, gap down. What a beat down this week. It did finish off the lows. So again, it may get a little bit of a rally. You'll have some resistance around, yeah, we'll call it 13,000 there. So that's basically where you broke down from. Maybe even 12,800, and this is a weaker equity, so you have to respect that. But pretty good beat down there for the Dow Transports. All right, let's get over to interest rates. So let's look at the 2-year first, and I want to talk about this. So I've been really kind of harping on this all week long on my channel, but so the Fed raised by 75 basis points on Wednesday, which is, that's painted as a quote unquote aggressive rate hike. Yet, if you look at where the 2-year was on September 12th, you know, it wasn't even at 3.6%. As of Friday's close, it's at 4.2. So if we just say 3.5, and we round this up to 4.25, how many basis points is that? 75, right? Roughly. So the Fed's quote-unquote aggressive rate hike did absolutely nothing to the 2-year yield. So this is kind of the point I've been making. They're beating around the bush, and they're just staying behind the curve, and they're not getting out in front of the problem. They should have just ripped the Band-Aid off. But point is, the 2-year yield, this is where they need to get. And as long as this keeps going, they're going to keep being behind the curve as long as they continue to, you know, try to taper it and beat around the bush here. But the 2-year yield surging up above 4.21%. By the close on Friday. The 3-month did get a little bit of reprieve, but, you know, not much. I mean, it's still in a huge uptrend here. And then we can see the long end of the curve, 30s, and even the 10s came back in a little bit. You have a little bit of a topping candle there on the 10. The problem with that is all that did really is further invert 2s and 10s. So 2s and 10s inverted by 52. 3-month and 10-year, you can see got a little bit of reprieve there, but then 5s and 30s. Inverted by 37 bips. So you got 2s and 10s inverted by 52 bips, 5s and 30s inverted by 37, and then we have 10s and 30s inverted by 8. So inversions almost across the board in all the major ones. Really the only one that's getting a little bit of reprieve is the 3-month 10-year. But, you know, further distortions, and, you know, what else is new in this market. And, you know, another kind of indicator here rate-wise is look at HYG. I mean, this is making new lows. This did not rally as much with the rest of the market. Neither did JNK or LQD, and that's where the NASDAQ needs to catch up to. So this is telling you we've got more downside here in the future. Anyways, here, let's move on. Home builders also taking a hit here, although noticeably XHB was only down 9 cents on Friday. ITB actually scratched out a gain. So home builders showing a little bit of strength here, which is a little strange considering, you know, the yield curves are so inverted, but maybe they're looking at the long end a little bit more. They had a little bit of, you know, reprieve on Friday, which we talked about. So you see the long end, the 30 coming back in. But either way, they got hit with everything else. VNQ real estate got pounded. This ultimately wants to get down to 79.80 bucks. It is short-term way oversold, but you can see it blew through that double bottom Thursday and Friday before finishing off the lows there. So again, this could have a little bit of a bounce next week if the market gets a lift, but ultimately 79.80 bucks is where I have it penciled in to go. Financials finally coming to the realization that the yield curves are a problem. We talked about how XLF and XBD were outperforming to a degree, and they finally came back to earth here. Not quite to double bottom, but you did fill this gap here on the daily XLF. And again, obviously your next level will be right at that pivot low there at 30.37. But again, oversold. If this bounces up, you'll have resistance at 32.20. And then if you somehow get through that, it's just above 33. And if we look on the weekly, take a look here. So we closed below that pivot low. So that is significant. We're right on that 200-week moving average. If we bounce and put in a lower high, this will go lower though. So be aware of that. And broker dealers, finally, I told you guys for quite a while here, probably the last 2 months, I was like, this is going back to 420. And we finally got there on Friday, crashed right through it. We held the 100 moving average, but once this gets through this pivot, it's right back down to 400 on the broker dealers. So finally, financials coming back to earth here. And it was just a matter of time, but they had been outperforming for quite a while. A lot of that has to do with, broker dealers, they sell volatility, and we've had a volatile year. So they are pairing some of those losses there, but ultimately, can't escape the bloodbath once everything starts to really roll over. All right, energy. So let's look at crude. So crude finally dipped on Friday. And again, this is kind of the scenario I laid out here. If the market does dump here, even the strong sectors will come down. And crude has come in. I still think it can get down to that 75 handle again. We got that really nice trend line here going back to 2021. You got the 100-week moving average there as well. I do like crude here as a buy. And I think, if it gets down to 75, I would add more aggressively. But I do like this area here. So nothing's really changed. Just seeing a little bit more of a sell there on crude. And then XLE, this one took a really big hit here, so down 7%. Safety names like Exxon down almost 5.5%, Chevron down 6.5%. These are safety names, so for them to get hit pretty hard like this is definitely significant. Be patient with these energy stocks. So we'll have a little bit more downside in the broad equity markets, I believe. But that's why I've been saying for months, don't chase them up here. Let them correct. Let them do their thing. They got parabolic. This is normal. This is a parabolic move. So it's normal for you to have some pretty steep corrections after that. So be patient with them and let them come in. XOP down 8% on Friday. Big dump there. There's a little gap fill there. Basically kissed it on Friday. But after that, it's down to 110. And then OIH also taking a really big hit, down almost 9% here on the OIH. So that basically trying to hold, that's basically right into this pivot here that we tagged in July. And that goes back obviously to January. But yeah, what a big beat down there for energy stocks. And again, even the strong sectors will come in a bear market. They can hold up better. But, you got to respect that. You got to respect the bear here. Anyways, nat gas, nice little dump here this week. It's getting close to a very good bounce area. So 650, somewhere in that range there, 650, 675. Coincides with this pivot high right here. And that 200-day moving average upsloping. Also have the 50-week moving average upsloping as well. So a pretty good sell off there on nat gas. We'll see what that does Monday. I'd be interested in a quick long for it, a quick swing long in this area if we get down there, Monday or Tuesday. But overall, pretty good sell-off there and very, very, very volatile asset this whole year. All right, let's look at uranium. So CCJ had a pretty good sell this week with the rest of the market, but believe it or not, this isn't broken. You were able to hold that 25 handle, really the low of this green bar here, 2470. But more importantly to me, the trend is still very well up on the weekly time frame. As long as you just hold this uptrend, this is fine. So there's no real problems here on CCJ. It did come in, again, strong sectors will come in. Eventually they'll be the last to fall, but they will come in. I will say the URNM is much weaker, and you actually negated this kind of inverse head and shoulder pattern you had here. So we had this inverse head and shoulder, started to play out. It didn't quite get the target. The target was around 88, and we closed below that on Friday. So that pattern is now failed. So that's kind of your negative here is the URNM has a failed pattern. CCJ has nothing really wrong, but so a little bit of a split tape there. I would just be careful with it at the meantime, but I don't really see any major problems currently. As far as some of the potash names, Mosaic coming in on Friday again, outperforming sector getting hit, down over 7%. This one probably wants to get down to 46 in the meantime, and then Intrepid, I've got that going down to about 32 potentially in the meantime. But again, ag names getting hit as well, DBC, so finally getting below and confirming this kind of trend line here. Still, trend is up very much on the weekly. This has support at 23, 22, and 20. Those are the kind of the numbers I've worked out so far. You know, and again, we talked about this, you know, it came down and you could make a case you had a bear flag there inside bar and it's starting to break down. So lower prices are probably expected. Again, 23, there should be good support. There's a gap fill there as well, and I believe a 382 retrace. And then you've got that pivot high at 22, and then I think 20 is your 50% fib. So there should be good support in that area if we were to come down there. All right, dollar index, good old dollar that never wants to come down. So dollar continues to chug higher. I do have some natural resistance around 114, so we'll see if we can get a pullback there. But obviously, everybody knows it by this point. The big levels, 119, 120, so right up there. And I believe I showed you guys this last week. I know I have on my channel, but if you just take a measured move here, you know, 78, we'll call it 80 to 100, that's 20 points. And then, you know, you just add, you know, 20 points to the breakout. So you broke out here, you know, it's up to 120. So that takes you up there. That could be where the dollar's headed. So, and it can get up there quickly if we have panic. So we'll definitely be on watch for that. But that's really all I have for the dollar. It's overbought, it's extended, it's parabolic. You know, what can you say? So there's nothing to say it can't go higher. But when it reverses, it'll reverse very, very sharply. All right, but until then, got to respect it. All right, for gold here, so we had a little bearish inside bar start to play out on the daily. I'm expecting, at this point, sentiment's pretty bad, and I love that. But I'm expecting probably one last flush in gold, especially if we have a panic in equities. Usually gold will sell off with equities at first, but it'll bottom first. And it bottoms fiercely. So I'm thinking we probably have some type of a flash crash or something of that nature in gold, which will be a major, major buying opportunity. So I've already got some levels worked out. I don't want to give them out just yet, but that's kind of what I'm looking for here. And really kind of with all the metals, but gold specifically. Again, if we have a panic event, and we did have the VIX start to break up a little bit here on Friday. It did actually make a new high there. So we could be getting close to that. But if we have a panic event, usually gold will sell off and then it'll bottom first. So that's kind of what I'm looking for right now. But we'll see what we get. Again, it was down this week. You know, nothing to say I can't get a bounce in the short term with the markets. But that's kind of what I have penciled in right now. Silver did come in as well, although they did save that inside bar on the daily. So this is technically not broken. It's uglier, but it's not broken, at least not until you close below 1877 on a daily basis. But silver still hanging in there, still holding up, not making new lows like gold is. Platinum also came in pretty sharply as well. All commodities got hit on Friday, as there's kind of now fears that the Fed is going to overdo it, which inevitably they will. I mean, the Fed's never been able to engineer a soft landing or anything of that nature. So that's kind of the fear right now. I would be interested in entering platinum again. I did traded this twice this year, both successfully. I'd be interested in picking it up again. We got to see the pattern here, but pretty good dump there on platinum. Ultimately, I am really, really getting bullish on the metals. I think sentiment is getting to extreme levels, but I think it can always go a little bit lower. And you know, people need to hate it, and they don't quite hate it yet. They dislike it strongly, but they don't hate it yet. All right, so anyways, let's move on to copper here. Copper making a daily lower low. So I would say copper is a little bit vulnerable here as well. You want to see it hold, let's call it 331 on a weekly closing basis. But for right now, you did make a daily chart lower low and a weekly close as well. So a little bit of weakness there in copper. So I would say That's on the vulnerable side. And then lastly, let's get over to Bitcoin. Not much to talk about. It's kind of just hanging in there. I will say, it hasn't made new lows. So if you look at the spiders or the SPX even, obviously we made new lows really the last month or so. There's the NASDAQ as well. Dow right down, new 52-week lows as a matter of fact. But this past week or so, crypto's actually just kind of hung in there. Bitcoin, Ether, all kind of just hanging in there. Ether still has that head and shoulder look there, and that is still valid. So be careful of that. But for right now, Bitcoin's kind of hanging in there. The problem is, nothing's really changed on the weekly. This is still just a massive bearish inside bar, bear base on the weekly, below this trend line, below the moving averages, and on the monthly you have the same look. So big bearish inside bar. I think this is building a bear base, possibly for a move down to 12, 13,000. But in the short term, it's showing a little bit of relative strength here versus the overall market. All right, anyway, so let's get back over to the spider. So again, lastly, we got a little bit of a bid off the lows, lots of puts, a lot of shorting going on into the hole. Smart money loves to collect those premiums. Again, we talked about the broker dealers. They've been doing this all year long. So again, wouldn't be surprised to see a little bit of a bounce. We're oversold daily, hourly, pretty much every not every indicator, but definitely on the daily time frame, daily oversold, and going into a support area. So it's a bounce is likely, although I still think that will be one more good sell the rip opportunity. Anyways, guys, I'm going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com. And I'll talk to you all next week.